Good afternoon and welcome to the Final Bar. I'm Greg Schnell, your host for the show, where we check out the most interesting charts to get set up for the following week. With some intermarket studies, we'll be finding out the inflection points for minimum risk and maximum reward. Lots going on this week that I want to cover off, so we'll jump right into it. Thanks for joining me. Really do appreciate it. And let me know if there's things you'd like to see on the show, gregs@stockcharts.com. Today, what I want to cover off briefly, the last few times I've been talking a little bit about the parabolic surges on the marijuana names. And it's just a really good lesson trying to talk about it in real time rather than post analysis. So I'd like to spend some time on that and perhaps give some examples of clues that might tell you when parabolic surges are over. I find there's a lot of people trading them that haven't studied historical ones. And so we're going to try and help improve the odds of trading them, and they're hard to trade. So just make that very, very clear. And then the next thing I want to cover off is the financials, because they're not behaving very well. And I want to talk about that specifically and how we can see that and look at them as a group and just discuss the types of setups that we're seeing and why there's a clue there that might be an industry to avoid. Now, if you're a long-term holder, that's not really what we're talking about. We're talking about for people who want to stay in while the trend is going higher and out while the trend is going lower on an intermediate basis, then you'd probably be looking to try and get out. So with that, let's jump into it. I think you'll enjoy the discussion on the parabolics. There's lots to cover. So first of all, maybe we should cover off what's the definition of a parabolic. So in this particular stock, what we see here is kind of two major growth areas where the stock really ramped up. And one of the things that happened here was the stock started to show a little bit more volume, nothing more than extreme over on the left. And I realize it's almost nothing, but that's my point. And then as the stock starts to speed up, so we're going from call it $1.50, and the stock doubles to $3, but we haven't really seen a huge blow up in volume. I mean, it's bigger than it was, but it's not as big as it had been in the past. And so you have to wonder, are you near the end? Well, it pulled back for a couple of weeks and then it went on another final spurt. And then what you see here on this big, huge surge was massive volume. And then within a few days, the volume just died down. Now look what the stock did for the next 6 months. It did make a higher high in here, but for the most part, it basically just got barely above the prior high. This was 476. I mean, for something that moved 300%, this moved from 476, a couple of days went to 540, and then pulled back down and really didn't do that much. So in the big picture, for 6 months, you haven't got anything. And then all of a sudden, we get a whole bunch of setups here, and we can talk about the setups, but I want to talk about the exit. And one of the setups would be that you're breaking these parabolic or the PPO downtrend. And so that's a clue that something might be starting to get set up. Here you have positive divergence where the price is the same, but you've got a lot higher momentum on the second low. And then as we surge up here, look at what the volume's doing. So the average volume in here is around 3 million shares. And then you get this sudden volume burst. So that is a very positive sign. And then it pulls back and the volume goes really, really quiet, which is okay. And then all of a sudden you start to see these big volume bursts. Like this is, almost double or triple the average volume shown in this red line here. And then as we spread out, we notice that the volume continues to accelerate. So these are, big, huge days, 15 million shares. And one day doesn't make a trend. But what happens here at the end, here we're starting to double and double and double. And then you're getting these huge sell-off days. And the point I would like to make on these, when I went back and looked at gold surge, Facebook, Facebook wasn't quite as obvious. Some things like Twitter, Shake Shack, Alibaba, Bitcoin, all of those, you start to see some real interesting things. And one of them in here was that, see how this was running up, and then all of a sudden you get this huge pullback, which is like at least a 15 or 20% pullback, kind of scaring most people. In this case, it stayed up near the high. Sometimes you get this big breakdown where it's a lot lower. But the point would be that as this is breaking out, it's coming up, and now the volume is really starting to surge. And then day after day, you're getting these huge wide-ranging swings. So this is a 20% day. This is a 20% day. And I can show that to you just using the inspect tool, just to show you how to do that. So if I click here on the inspect tool and I drag, look on the left-hand side, and you'll see under the title of the chart, as I drag down, so this is 1 day, and you can see that was a 16.85% day. The day before that was the same kind of thing, but not quite as severe. And so you're getting these days where every day is 10% or 11%. And when you're starting to get into the end of a final run, usually you need to be aware that, it's not quite normal that things are going up 10% per day, every day. And at some point, this is probably going to end. So literally, you were trading at 550 on September 4th. And on September 12th, you were trading at $9. So almost 80% in a week's trading, 6 days or something. So with that, you have to be expecting some sort of a pullback. So it's not the pullback that we're worried about. The point is that you've made huge gains in a week, and most people now want to ride that for another 300%. So the point I would make is that look at this volume, and you're talking, here you had one stab at, 10 or 15 million shares, and then it was normal. That's not what we're seeing over here. Over here, and let me get rid of this inspect tool now. Over here, what we've got is this huge accumulation of volume. And, so we have 15 or 20 days in a row when the volume is well above average. And the problem is through that, you're getting these huge, massive days. So your average volume is 3, 4, 5 million 5 million shares. You can tell I used to be in the fuel business, liters. And now it's 25 million shares per day. So 5 times average volume. And back here, it was probably 3 times average volume, but it still gave you a clue that, for the most part, the euphoria was too high, and there's not many institutional investors that are going to start adding with that much euphoria. So you get some sort of a pullback. Now, you could have bought and range traded this all the way through. Obviously, with these huge ranges in terms of percentage, 20 and 25% in a couple of weeks, those are worth trading. But the real point we want to talk about is the whole industry group right now at this point has done this parabolic surge. And by far the leader in the group, if we were to pick a name, is Canopy Growth. And Canopy Growth recently listed on the New York Stock Exchange. And when it did, it took the historical data from its trading in Canada and moved that data chain over to the US. So let me just go find the US listing. Just trying to find it here. Might be easier to do it from the summary page, sorry. So just go into summary. And on most computers, you can use Control F or whatever to find this. So I'm just going to go, well, here it is, CGC, Canopy Growth Corp. So that's the one we want to look at. And the point I want to make on this particular chart is, so this is weekly, and you can see that it's sitting down here at about $30 a share, and it went to $60 a share in 4 weeks. There's not a lot of New York Stock Exchange stocks doing that, but you can see that it broke this big downtrend on a weekly, and a pretty nice place to get in and try and go long. Same thing on this one here. It was not a bad entry. And this one here, you had a big flat PPO, and it started to turn up. So there was a lot of clues that this was a great place to enter. Now my point would be, so the full stochastic has turned over. This volume is clearly exceptional. So, back here, the average volume was probably 5 or 6 million shares a day, and it was 100 million, just to kind of put this into perspective for the week. Or sorry, this was a weekly volume of 5 or 6 million, maybe 10, and this is 100 million. So on a week, you're getting volume explosion of 10x. Something's changing. And so people will naturally assume this will go on forever. That's not really what we want to expect from our stocks. That usually 100% gain is something worth taking and not worth leaving. So there's three clues that I think are pretty important when you're looking at these for trading. And one of the clues has to be um, the, the the parabolic surge, first of all. So in this case, $24 to $48 would be a double. This had a big pullback in here, and it doesn't look like much, but 48 to 41 or whatever, this is a 20% swing. So you had climbing up almost every day, done a 20% swing, and then this huge elevator with literally a blow off move. So this move here is from 47 to 52.50. So that's a full 10%. Then you had a wide ranging day up here, which is 15%. And from, call it $56 open, so it's a $3 gap on the open, jumps up and then closes lower, and doesn't, not only closes below the open, but closes below the previous day's close. And now it starts to chop in here. And really what's happening in here is smart money is trying to distribute the shares without letting them fall apart. So it takes a few days to get rid of their position, but we can draw a trend line under this chart area, which is pretty important trend line. Let's just do that. And sometimes the trend line is so straight up. Sometimes the trend line is so straight up that it doesn't seem like a good trend line to draw. Over here, the example might be something like that, and even here we had a big trend line going on. You don't get to, it's easier in hindsight to draw them all, but quite frankly, even if I drew this one here, would you want to wait for all of this 35 to 16? That's 50% off in 3 weeks. So when you get these parabolic moves, and literally the way you see them is they're showing up on this relative strength chart, and all of a sudden they're just going, this is kind of a normal slope, I would say. This is not a normal slope. This is outrageously good. And when you get those, you want to draw a relatively tight trend line. And if there's any sort of snappage on it, your gains are 100%. Do you really want to wait and find out if you're only going to get 60? So it's a good opportunity to try and figure out how to lock in those gains when you get them. So one of the clues has to be that you're in a parabolic surge where price is doubling for, in this case, $15 to $35. It was a 120% move or something. And up here, you've got this parabolic surge, and you can draw the trend line on here. And again, anytime you can put a really steep trend line on something that's a double, it's a pretty good place that if that starts to break down, you just want to exit. Now, it looks easy in hindsight, but intraday there's wobbles, and so it's very difficult. But you got to give it enough room to work, and yet at the same time, if it starts to break down, you really have to decide if you want out. So the point I would make, one is that's relative strength. Two is you had the parabolic surge. Three is the volume compilation. And when you see kind of a normal volume, like this regular volume is absolutely shut out of the chart because it's just dwarfed by what we've seen recently. And again, 35 million shared days when this thing is averaging 2.5 to 3 million for months. And then all of a sudden you're getting 35 mil days. Those are 10x. That's got to be a clue that something's going parabolic and probably needs to be considered for an exit. The last point I would say is you also have a percentage oscillator, a price percentage oscillator. And when price starts to move in huge percentages, so if we go look at the Apple chart, you'll see 4% waves or something like that. Here we're sitting with a 20% move on your percentage price oscillator, which is just crazy big. Now from that, over here, it's a 15% level, which is still absolutely, most charts will never see that in a year. And yet this has had it twice in 6 or 8 months. So a really exceptional position on the chart. This has given you a sell signal. The volume has all of a sudden, gone from spiking way up to now just being average, which is 10 million shares a day. And that's a 50-period average, which is still stunning. if we had a 30 period average, this thing would be much higher. But watching this volume go from these huge levels down hard and then breaking through here, I know lots of people are thinking this will run a lot further. My only point would be you're up 100%. You've got your profits are really, really big. The difference between collecting the profits, just going to use the percentage change tool. So if we try to take profits as this thing is starting to do 10% surges, this is 129%. If you were in near the lows, odds aren't we wouldn't be in near the lows, but whatever, some sort of a breakout here, that's when we're starting to accelerate down here. So you're up 100%. You've got 10% days going on back to back. You've got a relative strength curve that's absolutely soaring. And now if we take and we wait, even if we didn't catch the top, I have to get the pointer here. If we didn't catch the top and we have to put up, if that's the right word, with less, okay, so we start to sell out, even in the middle here, it's 75%, 70, 80%. Those are big, but now all of a sudden drop down to today's low, and in a week, we've given back 50% of the move. And so, the greed didn't really pay off, and having 10% days back to back after already having a 20% rattle usually is a good place. And you'll notice on most of these parabolic surges that they get the rattle and then that final blow off. And gold was doing that back in 2011. Those are great places to just be aware of that. So in here was the big rattle. It went on for a few more days and the surges were really good. And while it was doing that, I mean, the volume at that point in time didn't look magnanimous, but quite frankly, on the scale of what was going on before, the volume would have taken up the whole thing and would have been huge. But it's the size of the moves on the price and the volume and this parabolic move on your PPO indicator to just crazy levels like 20%. And then, your relative strength break. So all of those combined should give you a clue you're in a parabolic. You're enjoying the price. You probably want to tell everybody at the house party you're at that, you're making huge money in marijuana stocks. And it's almost like if you're willing to tell somebody how much money you're making, you probably want to hit the sell button. So that is a really strong clue to some of the parabolics. Now, the point I want to make on these is that as we go forward, now we can just quickly look through the rest of this group, and I've got them sorted for the most part by strength. So let me just go grab them, and I want to put them in view all, just kind of 10 per page, and just quickly look at them so that you can see the, let me do one more thing. I forgot to set it to, so that everything in the group is just showing on a daily, because a weekly chart would have helped with the breakout. But the problem is on for the point that we want to see, we're not going to be able to see the sudden surge. So this is the Canadian version of canopy growth, which we just examined. You can see the relative strength line breaking, the uptrend in price breaking, volume was obviously off the charts, huge levels up here on the PPO. So just something that we should probably look at and recognize the issue. Now here's Afria, and this one was rolling up here, getting to prior highs, hit to $17 to $21.50. I don't know, is that a 25% day or something? It had your big wobble here, and a few days later, you're getting these huge surge. Really, after that huge surge, you didn't get, you had 3 days to get out of it, and then all of a sudden, the last 2 days from 22 to 17, you've given back probably 50%, even if you were just buying it off the breakout. Same thing, volume, looking at the PPO way up here at 15%, that was a prior high. So you're getting these huge momentum surges, and the signal is sitting there. Here's Hydropothecary. And again, this one had some big moves in here, pulled back, tried to break out again, but really did nothing for, I want to call it 4 or 5 months. Broke out from here. This is 440 to 540. Nothing wrong with that move, 20%. That just tells you the scale on these things. And then over here on the right here, it's 450, and all of a sudden this thing goes to $9, a full double in 1 month. And you're up here, you've got this trend line on relative strength starting to break. And so as that goes, your volume is surging. Here's your PPO, and not all of them are 15%, but the 15% on a PPO is a really, really high level. And so it's a place to be aware of that this is a major trend change going on. And when the industry leaders are starting to crack, that would be a good clue. Now, this stock the other day was $8. It went to $16. Look at this gap move from 13 to 17. So what is that, 30%? And then pulls back from there and actually gives you one more chance to get out, which I'm actually impressed you got. But this was the first real major surge with a pullback. And then it gave you one more chance. And if you weren't taking profits on that one, it was pretty tight. So relative strength line was broken. You got out, tried to get back in as it's breaking out again, hopefully not. But now that trend line is broken. So it come up more through here, this area. Either way, you're broken, and you've got a sell signal on your PPO, again, up around 15%. This one had a 25% surge. These are good clues that things are going vertical. So here's TRST. What you see on this one is the same sort of thing. A big pullback in here, then the final high. You're taking out the prior high briefly. You close right near the open, so you've got a doji candle at the top here, and then all of a sudden you unload today. So from $13 to $10.50 or $10 in a day, I think you get the idea. That's a hard one to let loose. And look at the volume profile here. This is just off the charts, and a reasonably good clue that things are breaking down. This is your ETF, same thing. Relative strength line is breaking, so that's a compilation of all the stocks. And it's breaking the relative strength uptrend. It's breaking the price uptrend. Volume has gotten, on the ETF, it's not going to be quite as visible, but look at back here how strong it was. On this attempt, you're actually getting a lot less volume. So they're either playing the individual stocks or they're not as interested now. And it might be that this is the final double top for this because the volume interest was so much less. So one of the things that happens is on the left shoulder, you'll end up with the highest volume, the head, medium volume, and then on the right shoulder, it almost shows up as no interest. And then we'll probably see a bigger pullback. But I think you get the idea that you can see the markings on a lot of these charts. They're very similar, and it's a good place when you start to see the whole group behaving like this. This is Aurora Cannabis. It couldn't even get back above the 200-day moving average, and it still had a big move from $9.50 to $8. So $1.50 on $9 is 20%. So as you're looking at these parabolic moves, I think it's really important to understand how to trade them, because if not, you're going to hand back most of your money in greed. And this Tilray is one I said yesterday, if I was a person who liked to short, I would short it. Well, I would have got squeezed for another $20 trying to short this. And apparently there's no stock to borrow, but it's already had its big pullback. The volume is through the roof. I don't know when it breaks, but if I owned it, I would definitely be trying to sell my shares and get out of this thing so that I could move on. And the PPO at 30% is probably a real clue that there's probably not much room left in the name. Okay, so we took a bit of time with that, but hopefully there's a lesson in there about when you're in a parabolic move, things to consider. And again, here's just a trend line that you could have drawn very quickly or here, and it would have got you out with the majority of your profits. And again, if it's going to fall 50%, you get back in and can double dip them. It's a lot better than watching the 50% disappear and then try to manage that mental damage. Okay, for the second thing that I wanted to talk about was I went and did a technical scan, and I just said U.S. countries, and then from down here, from choosing industry groups, I picked the financial groups that I've listed up there. So you scroll down to financial sector, and I picked banks and asset managers, specialty finance, investment services, which is like brokers, Morgan Stanley, Goldman Sachs, that kind of thing. And just said I wanted only large caps, so I didn't get too big of a list. And I ran that scan and I came up with this group. Now, looking at the scooter ranking or the stock chart's technical ranking, when stocks are in the top 25%, that's great. So above 75. Well, what you see here is that the entire banking sector is below that. There is literally one stock that has price action above that. And now, as we go down here, you'll just see that these stocks are in topping out mode. That one still looks pretty good. But the scale, I think, is that it's not moving as fast. I don't know, it looks pretty good to me from here. But here's Moody's Corporation. And as we go down, so here's JP Morgan. And you can see the problem. The S&P has continued to move up to the right, and a lot of these stocks have not. Now, all of the Canadian stocks, you'll notice RBC, TD, BMO, CIBC have all held up pretty well. But that's just, I mean, the Canadian banks, there's only 4 or 5 of them that are really big. So they do behave as a group. Now, here's Citigroup. Again, that chart isn't that strong, but it says that its price action is, it's only better than 35% of the stocks out there. Well, here's Wells Fargo with 25% of the stocks. So you're actually below the bottom in terms of performance. So I think it's important that we realize the whole banking group is not doing very well. And if you are a trader, then you want to be aware of that. And then the second thing to remember, and I wrote it in a blog a couple of weeks ago, was that if the banks don't do well, it's telling you a story. And that's because banks get to see everybody else's paperwork, all their books, and they get to know if things are improving or slowing down. And so the important thing to be cognizant of here is that these banks are not telling us that they're doing well. So even though the interest rates are supposed to rise in the next 2 weeks, I think the Fed meets towards the end of the month. But when this is coming here, the big question is, why are these stocks so weak? And here's Goldman Sachs. Come on. And what you see there is, that's really not a chart that you want to own just yet. So I would be, I just want to make the point that the banks aren't doing that well right now. And so if you had a choice, it would be a good place to not try and buy them, because the issue that we have with the banks is when they're doing this poorly, we can spend a long time owning them before we're going to get anywhere with them. Okay, so just to wrap up, let me go back to my slide here. The point I want to make is that these parabolic surges have some clues in them, but you need to have some method of selling, and maybe you don't agree with mine, but I encourage you to develop your own, because playing in those areas, again, the move from 100 to 50% for some of these stocks is 2 days in terms of your gain. How much you're going to capture. And so it's a lot better to wait for or to try and wrestle out as much as you can before the stocks actually physically start to break. But a good clue is usually that 10 or usually 20% pullback, and then one more acceleration to the high, volumes going crazy. And at some point in there, you want to start making sure you're getting your money off the table. So with that, I'd like to thank you for taking the time to join me. The Final Bar airs live on Thursdays at 5 p.m. Eastern and can be found on the Stock Charts TV schedule for your viewing convenience at other times during the week. It is also available on the Stock Charts YouTube channel. And with that, have a great weekend and good trading.
Here's how to put a simple line on your chart without using the annotation tool. Let's say we want a line in here at 47.50. You can just drop down here into the overlays, pick horizontal line, add the price point, 47.5, and we're going to use a red line We're going to make it solid and thick and hit update, and that blasts it into the middle of your chart.